All right. Hi, everyone. Oh, yeah, I have the view set up wrong. Heidi, I have to hide you. Okay, let's see if that does it. Let's see if it works. In the meantime, I will start saying hello. Hello, everyone, and welcome to the Bottom Line Live. We're going to talk about tax compliance tonight, which is not super far away from what I usually talk about, since I'm always talking about bookkeeping. Okay, good. I think that fixed it. Good. So I'm just going to share this and get it all the places that I'm supposed to put it. And then let me tell you guys what we're going to be talking about tonight. We're going to be talking about tax compliance. Like, what does bookkeeping have to do with tax compliance? How are those things related? How do you keep tax compliant with bookkeeping? Things like that. So let me share this, get it in the right place. Wealth dynamics. Okay, and we will be doing questions. So if anybody has any questions, feel free to ask, whether you're on the Facebook or live on the Zoom. We will let you ask all the good questions. So without further ado, let me start talking about my favorite subject, which is bookkeeping. And so let me tell you guys, basically, if you want to be able to file your taxes correctly, you have to have bookkeeping. If you don't have bookkeeping, your taxes aren't going to be right. So what does that mean? Okay, so first of all, just a very, very basic. You're filing your taxes and you need, what is your CPA going to ask for? They're going to ask for a profit and loss and a balance sheet. And we're talking about businesses here. This can apply to individuals as well, but mostly we're talking about businesses. So your CPA, that's the first thing they're going to ask for is a balance sheet and a profit and loss. So in order to be able to give them those, you have to have bookkeeping. So we've gone over in the past what those specific reports are. We'll go over them a little bit more, but just to kind of in brief go over. But your profit and loss is going to be kind of what it sounds like, all of your income into your company, and then every transaction or expense out of the company and your bottom line. So what's your profit? Then your balance sheet basically shows the balances on your asset and liability accounts. So there are some things that show up on your balance sheet that people ask me why it's not on the profit and loss. For instance, when an owner gets paid out from his company, it doesn't go on the profit and loss as an expense like they think it would if it's not payroll. If it's a distribution, it goes on the balance sheet because it's an equity account. It's the owner's part of the profit that they're taking out. So any money that the owner takes out of their company automatically becomes profit. And that's why you won't see it taken out of the profit. It's still profit. So that's that part. So now when you give those two reports, then your CPA can use them to file taxes. They have to be able to tell, the IRS when they're filling out the report, they need to be able to tell them what are the different expenses. So how much did you spend on marketing? How much did you spend on rent? How much did you spend on, vehicles or mileage, however you're tracking it? Did you have any corporate sponsorships or charitable donations? Travel, business meals, office supplies, advertising, software. Those are all different categories. It's not that the IRS is asking for each specific one what it is, but they need to know general categories of those things. So that's going to be the first thing they need to know. Then for certain levels of business, they also need the balance sheet. The balance sheet shows what's in the bank, what are the assets, what are the loans, like do you own property, do you own vehicles, do you own machinery? If so, what is the value of those? What's in the bank account? What's the value of that? Do you have liability such as mortgage, vehicle loans, equipment loans, loans to shareholders, all of that, and the shareholder distributions and the equity is on the bottom. So those are the things that the CPA is going to need to see in order to file taxes. So that's the first thing to know about tax compliance. Hey, let's see. And then before I go on to some of the other things, does anybody have any questions here? And if you're in my Zoom, then feel free to raise a hand or post a comment and I will let you speak. If not, I'm going to go on to the next sections. Okay, great. Good. So the next things we wanted to go over about tax compliance and bookkeeping. So how do you keep your accounting up to date? So the way that I would best answer that is to have a bookkeeper. I think that if you own a company, your best use of your time is going to be building that company, doing the sales, doing the strategic planning, doing even the delivery, if that's what you're in charge of, as opposed to figuring out the books. Now, if you're a newer company, a smaller company, you're going to do it yourself for now, you're bootstrapping, totally understood. I think the best software to get when you're small is either one of these smaller softwares like Tax Hurdler or even just a spreadsheet. As soon as you can, go into QuickBooks Online, get yourself set up in there. You can start with QuickBooks Simple Start. It's the very basic level of QuickBooks Online. Connect it to the bank accounts and the credit cards that you use for business. Make sure you have separate accounts for your business and for your personal. You're not doing your personal bookkeeping. You're just doing the business bookkeeping. So you only need the business expenses. So make sure you have that separated out. And then you can either, pay for a little bit of training in QuickBooks, or you can do a lot of Google searches and figure it out. But basically what you want to do is you want to go through and categorize everything. And so you can easily see what the expense was for. And then you want to reconcile it to make sure that it matches the bank account. Those are the basic steps. Categorize all the transactions. And this is, of course, if you're doing it from the bank feed. So, you'll go into QuickBooks in the banking section. There's just a dump of every transaction that has been in that account from whatever time period you're looking at. You go through and label it. This one's office supplies, this one's marketing, this one's hiring expenses, however you want to label it. You go through and then you reconcile to make sure you have all the transactions. People sometimes ask me, why do you reconcile? It's important to reconcile to make sure that your numbers match. If you somehow got a duplicate transaction in there, maybe you entered one and then QuickBooks entered one, whatever, and there's an extra $10,000 of income that doesn't exist and you don't notice it, and you send those numbers to your CPA, and now you're paying taxes on an extra $10,000 that doesn't exist, or $100,000, you're going to be paying too much money. Or if you missed expenses, you're going to be paying too much money. Or if you're just have the expenses in the wrong place, there's some categories that are 100% deductible and some that are only 50% deductible. So you want to make sure that you do reconcile at the end. If you don't know how to do that, again, you can either pay for some training, you can hire a bookkeeper, or you can do a deep dive. There's bookkeeping classes in Google. I'm actually in the middle of making a bookkeeping class, which we will make available. But I recommend hire a professional. Like my dad always says, you wouldn't pull out your own teeth, you go to the dentist. So of course you should brush your teeth and floss and all that. And there are things that you can do as a business owner, especially if your company is new or you're just starting it out or it's still small. Okay, so that's how to keep it up to date. And what do I recommend to people is don't wait until the end of the year and try to do it. It's going to be a headache. It's going to be 3 days with cups of coffee and maybe some tequila to try to figure it out, and it's just not worth the headache. So you could do it whatever is the best schedule for you, but you could do it once a week. You could do it every day if you wanted to, because it would only take a few minutes if you did it every day. If you did it once a week, maybe it would take half an hour, maybe it would take 2 hours. If you do it once a month, you might not remember what you spent that money on. It gets harder. If you have a lot of transactions, it can become overwhelming. If all you can do is once a month, then do once a month. But I would say do that as a minimum. I wouldn't do less than once a month. We do have clients that we do their bookkeeping sometimes quarterly. And again, they're going to be smaller companies, newer companies. That's why we do it that way. But it's not the easiest way to do bookkeeping, because how many of you remember what you took out of the ATM for $100 3 months ago? Probably no one. By the way, don't use cash as much as possible, not because of any legal reasons, just because it's hard to remember what you spent it on. But similarly, it's hard to remember what you spent money on. So it's better to do the bookkeeping as you go. All right. What are other pieces of tax compliance? Okay, how to keep track of your bills. So I think if you're going to keep track of your bills, you can use QuickBooks Online. You don't have to. You can make a spreadsheet if that's easier for you. You know, for some people, spreadsheets, they've been using Excel for a long time. So you can make a spreadsheet or you can put it into QuickBooks Online. But the basic information that you want is you want the name of the vendor, how much is due, when it's due, if there's going to be a late fee. If it's late, you should note that information, and then preferably the bill number so that you can sort it by due date, so you can have a good date line and pay things on time. There's also things that you only pay once a year, such as taxes, such as certain membership fees, things like that. You should be tracking those as a bill as far as like doing set-asides for it, right? So if you know that at the end of the year, you need to pay a $10,000 bill and you only pay it once a year, you should be putting aside whatever the calculation is. Let's say it's a $12,000 bill, to keep it real simple. You should be putting aside $1,000 each month towards that. So you don't get to the end of the year and have a $12,000 bill that you don't know how you're going to pay. So that's something that you should keep in mind as a bill and put money aside for it every month. And that will also help you stay tax compliant, especially if that bill is your taxes. I often recommend to people to put 20% of their income aside for taxes. It's a very rough estimate. I'm not a CPA. It depends on a lot of things, what you're going to pay taxes on the end. But wouldn't it be nice to have more than enough money set aside for taxes? And if you're with Wealth Dynamics and you have a sacred account, you could save that money in your sacred account and then just spend out what you need for taxes. So that's a good idea. Sacred account savings for taxes. Okay. Understanding your cash flow. So the main way that you're going to do that is you're going to look at your profit and loss. Once you have your bookkeeping done, you'll be able to see how much you spend, and you can run a profit and loss report on various time periods, right? So you can look at it the last week, you could look at the last month, you could look at the last year, you could compare this year to last year. So if you have all the data in there, you can literally run unlimited reports and know what your cash flow is. And you can even, if you're entering bills and invoices, you can even know what your cash flow is going to be in the future. So that's something I think is really important. Okay, and how to keep current with all of your payroll taxes. Okay, good. There's so many more things, but I wanted to go over the bullet points that we had so I didn't miss anything. And does anybody have any questions before I go on? I know I'm talking kind of fast because I used to feel like half an hour was a long time, but it ends up being pretty short. So anybody have questions in the Zoom? Let's see. Let's see, there's a chat here. Yes, so the question from Heidi was, what was the name of the QuickBooks I recommended? So it's QuickBooks Simple Start. That's their very basic level. I'll write it in the comments as well. There's different levels. There's QuickBooks Essentials, QuickBooks Plus, QuickBooks Advanced. You don't need those yet when you're just have a small company or when you're just starting out. If you're making several million, a year, you might need QuickBooks Advanced. If you want to enter bills and invoices, you're going to need probably QuickBooks Essentials or QuickBooks Plus. I have to double check and see which one it is that lets you do that. But if all you need is to track your profit and loss, then you can just use QuickBooks Simple Start. It's the most inexpensive one. I would not use the QuickBooks Self-Employed. That is not for a company. That's literally for someone who is just doing some business work with everything else that they're doing. And it just really asks you, is this business or personal? And, if you need that, then you need that. There are maybe some people who do, but for the most part, I would stick with QuickBooks Simple Start and make sure you have a separate bank account for your business and your personal, not combine them. And I'm going to write it here as well. QuickBooks Online Simple Start. And I'll write it in all of the comments everywhere. All right, so QuickBooks online simple start. Here we go. Okay. And then I'm going to go on to, let's talk more about payroll. I know Celeste and I talked a lot about payroll last week, but let's talk about how to stay current with your payroll taxes. So the best way to do that is, and almost no people, helping you with your payroll are going to do manual payroll these days. There's certain circumstances where you have to do that. Sometimes family offices do some stuff like that. But for the most part, everybody is using a payroll provider. Even if we're running it for you, we're going to be using QuickBooks Online Payroll, or we also started using Patriot Payroll for some of the smaller companies that need payroll. It's even more inexpensive, like a very stripped down basic version of payroll. So when you run your payroll and through a through a payroll processor, it calculates all your taxes for you. And it will also, most of them do this automatically. You can set it up to not do it automatically, but I recommend, if you want to make sure that you have it right and you're paying it right, do it automatically. But it'll either every month or every quarter, depending on how you're set up with the state and the IRS, it'll pull the payroll tax money out directly. And you set that up, when you're setting it up. And if you need help setting up payroll, you can always reach out to me. We'll get you on our calendar to get payroll set up for you and QuickBooks, get you registered in the states you need, all the, unemployment insurance numbers you need and all that stuff. So feel free to reach out. You can do it on your own. It's not super simple. It's government forms to fill out. It gets a little complicated, but I will never say that you can't do it on your own. So that's the best way. And then quarterly, again, if you were set up to do it automatically, it will also automatically file your quarterly tax reports, payroll reports, and your payroll tax reports. If you're not, then you have to make sure you go in quarterly and push them to e-file. There's, depending on which state you're in, there's several reports to file. So if you're in California, there's like 2 state ones and a federal, or I think 2 federal, Florida. But like I have employees all over the country, so I have to file reports because you're filing payroll reports for the state that your employee is in, not just where you are. So keep that in mind. You have to get registered for every state. If you have a virtual online company like I do, then you're filing payroll in a lot of states and you're getting registered in a lot of states. So keep that in mind. But the best way to do it is to set it up on automatic. And if you want to make sure that you have enough money in the bank account or something like that, and you don't want to set it up on automatic, then once a month, you make sure that you click the button to pay the payroll and the payroll taxes, and quarterly, you click the button to file it. You can file everything online these days. You don't have to fill out any paper reports, except for very certain situations and sometimes when you just got set up in the new state. So again, if you run into that situation, feel free to let us know. We will help you solve that. That's the best way to stay current. There are even other things. For instance, I just went through a backlog of notifications that I got, and an annual report. Each state has an annual report that you have to file. And all that report is, it's not taxes, it's just usually with the Secretary of State. In Florida, it's Florida SunBiz. And depending on which state you're in, it costs different amounts of money. In California, to file Secretary of State, it's like $25 last time I checked. If you're late, they charge you, I think, $100 or $150 late fee. But California also has like Franchise Tax Board for taxes charges you $800. Florida, for instance, charges you $150 for this annual report. But if you're late, they charge you a $400 late fee. If you're still late, they could, I can't think of the word, they could basically technically shut down your company and no longer is valid for the state. And then you have to do all the paperwork to get it valid again. So that's something that people don't think about very often. We just recently passed the deadline for Florida. Florida, I think everybody's due at the same time. In California, everyone's due at different times. So check on your state when that is. Make sure you're not late so you don't have to pay a hefty late fee. Sometimes your CPA will remind you about it. Sometimes you're registered with the Secretary of State and they'll send you a notification. Sometimes you won't get a notification. So you just have to know that that's something due every year annually. Every year you have to have it in order to have your company in that state. That will keep you compliant. Other things that keep you compliant are, for instance, 1099s. We talk about this a little bit all the time. At the end of the year in January, it's very bad timing. You have to finish all of your bookkeeping in January, and then you have to send out all your 1099s by January 31st. So that is the due date, the deadline. They all have to be sent out. Maybe the IRS will change it someday, but right now it's January 31st of the following year. All the 1099s have to go out. A copy goes to the government. Some states you have to send it to the state as well. Some you don't, but it always goes to the IRS, and a copy always goes to the contractor. That's something that if you don't do, you are liable for the contractor's self-employment taxes. So you have to make sure that you do it on time. That's another thing that will keep you compliant. There are other states and cities that have their own compliance. For instance, I do have a lot of clients in the city of Los Angeles. They have an LA city tax that's due basically by the end of February. We try to make sure they're all paid by February 15th. You basically have to calculate your annual revenue. You put it into a magic 8-ball and shake it and see what numbers this form spits out at you, because depending on your industry, it'll be different numbers. So you never actually can really predict what you're gonna owe. It's not usually that much money, but if you don't pay it, then they send you letters saying that you owe them a lot of money and late fees and penalties, things like that. So that's something you want to keep track of. I happen to know about that one because I have a lot of clients in the city of LA, but there are other cities, districts that have those kind of taxes. New York probably has some, so keep those in mind. Those are all things that you have to stay tax compliant. Okay, sales tax. Here's another thing. Even if you're a service-based company, like even if you're a dentist, but you're selling toothbrushes, you are going to owe sales tax on the toothbrushes. Now, sales tax these days can get very, very complicated, even more complicated than payroll, because there's so many different laws and rules, and there's people who are literally just sales tax CPAs or sales tax attorneys. I know that there are already those probably for payroll as well, but they charge a lot of money because there's so much to know. Each state has its own laws. Each state could potentially be part of a nexus where the states next to it also have to get paid. When you're in that state, do you have to pay sales tax on money on things sold only to people in that state, or are you in a nexus where the other states have to be paid as well? It can get very complicated. I've been recommending to people to sign up for this software called TaxJar that does sales tax, and we pretty much won't do sales tax for people anymore. Just like we need them to have a payroll processor, we need them to have a sales tax software, because it gets very, very complicated, and it's almost impossible for us to know all the rules for every state. So that's another thing. Keep in mind, if you're selling any products, if you are a model but you're selling t-shirts with your picture on them, you're going to owe sales tax. So keep that in mind. That's another thing to keep you tax compliant. I don't know if I've said all of the things that keep you tax compliant, but I think I just listed most of them. So are there any questions? Let me check my Zoom again and see if we have any questions. I don't see any more questions. And let me check my Facebook. Okay, I don't see any questions there either. Okay, good. So hopefully I have sufficiently lit a fire under everybody's butts about staying tax compliant. I do want to add, it's not scary. The likelihood that you're gonna like get in some huge trouble or go to jail is slim to none, but the likelihood that you're gonna get a lot of extra taxes, fees, interest on all these things is a lot. So let's avoid paying fees and interest and taxes to the government that we don't need to. If you file it on time, if you file it correctly, then you're not overpaying them. And we've already determined that overpaying taxes can also be fraud. So do it on time, do it right, and you won't have to run into that. And I say light a fire, but not scare you to death. Keep making money, keep doing what you're doing. That's the important part. Okay, good. So this is why I talk fast, because half hour goes by real fast. So this is basically the end of my webinar. If anybody has any questions that I haven't answered, feel free to comment on here. You can send me an email to maya@solvencynow.com. You can go on my website, solvencynow.com. I post a lot of blogs and articles and things on all these different subjects. So if you want to be on my mailing list, let me know as well. I think you can sign up from my website, solvencynow.com. You can see my blogs on there. I'm on LinkedIn under Maya Weinreb. I'm on Facebook under Maya Weinreb, and also on Solvency Now. I post all the articles for my Solvency Now page. And I'm on Instagram. I just started a TikTok channel, which you'll be seeing more about soon. And all of these videos and webinars that I've done are also on my YouTube channel under the Bottom Line Live, under Maya Weinreb, I think, or Solvency Now. And they're also on Jerry's under Wealth Dynamics under the Bottom Line Live. So you can see all these if you ever want to see them again. And again, thank you all for watching. Thank you everyone who watched live. I love that I have an audience. And thank you everyone who's watching later. And like I said, if there's anything I can do to help you guys be tax compliant, please let me know. Thank you so much and have a good evening.